going into another awesome training that I think will be so valuable tonight. We we do these trainings based on the lessons that we learn in that powerful manual. But we've done a whole revamp to how we do the calls and what we've been doing. We've been teaching you how to trade up until this go around, this series where we actually changed and start training you on how to trade. And it's been, my opinion, a pretty awesome series. Definitely been a long one, Barbara, but who was counting? We wasn't in no hurry, so yeah, we just kept focusing on where the focus need to be, right? So I think that was with the goal, and I think we achieved it. Seeing everybody start to get it and started to click, everything started to click. So let's get into another training, guys.
So can I say something real quick?
Take some notes. Sure.
So as far as you guys being um, taking a different approach on training us from where I'm sitting, you guys have been doing an exceptionally very good job. All right, and that's just me on my and a year and a half of being with you. So I really appreciate it. What do you say? How much? How long was it? A year and almost a half. Yeah.
Mhm.
So like I said, we greatly appreciate everything y'all doing.
And thanks so much, Stephen.
You're
I
very welcome.
appreciate that. And it's good to see the growth too, man. It is. So, okay, y'all, let's get going. We got a lot to get into, so we need to get going and turn this over to the birthday girl and get us right so we can get going, Bob.
All right, here's our disclaimer. For Futures and Commodities One-on-One Trading Group, trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. But before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Awesome. Very good, very good. At this time, we normally switch away from Barbara and have our quiz. I think we had one this week. Are you able to catch that for us too, Barbara? Um,
Yes.
so we stay with you and cover the quiz that we had.
All right. So our quiz was related to December oats. I'm going to be moving my stop loss up real tight soon on the December oats paper trades. There are two reasons why I am going to be doing that. What are they?
Mm.
Does anybody know?
I, I would say lock in some of that profit before.
Okay.
Definitely profit.
Minimize
Okay.
your risk to reward also.
Oh yeah, yep,
Those are good answers.
that's a good
Mm-hmm.
one.
Yeah,
Yeah.
good answers.
Definitely risk management. Yeah, you're right.
Yeah, it's a very good answer.
Anybody else?
That's really the reason why you do it. Just like that.
Say, don't let your emotions take over.
Yeah. Yeah, this quiz is to really see what you all think. I know you could get inside my head to know what I'm thinking, but also it's also to see, what you're learning as you're like in this trade. For those of you that got in it, it's a good opportunity to learn a lot right here. This with this paper trade that we did. So um, I wanted to spend few minutes here on this, Barbara, if you and Johnny okay with that. But is there anybody else who wanted to answer before we dissect this? All those were awesome answers, by the way.
Okay. As I learned recently, it had something to do with the contract specifications as well.
Yes, yes, absolutely, Paula. As you know, we kind of talked about this a little bit on our advance call. But what I want y'all to do is, if you can, take some notes. As I want to go into this, but I also want to go into this and give you a picture. Paint a picture. Here's how I'm thinking, and here's how I go about it as I'm in a trade, especially in a trade like this one. So um, let's talk about it for a few minutes. Barbara, do you or Johnny, do you guys remember what price did we get filled?
It's wasn't it 306.5?
306.4.
306.50.
Yeah.
Yeah.
306.5.
Yeah.
And our stop loss was it 286, 288,
286.
286. Okay. All right. So let's talk about the fact that we got in a trade at 306.5, and the market then started to trade up, putting us in profit. As you heard John and Stevens talk about the fact that we wanted to lock in for profit. Just lock in profit as we were in the trade. But I said there were two reasons that I was going to tighten up my stop loss, and I want to see if you guys would, share what was the two reasons you would be thinking. But there were actually a lot more than two. I just didn't want to overwhelm you all. I figured we could talk about it on the call, but there were actually several reasons why I wanted to do it. So let's talk about it. So the market did trade up, giving us a profit, and actually it got stuck into it got kind of caught into a sideways channel. Barbara, would it be better to talk about this and look at the chart, or just talk about it?
I think you need to look at the chart.
I have
Yeah.
it.
Yeah. So we got in at 306.5, and the market did trade up and give us profit. And then at the same time, like I mentioned, it actually started trading in the channel. Well, throughout the trade, we, actually were in profit. And then after I kind of recommended that we get out or tighten our stop up, you see that the market took a dive on Friday afternoon. But let's go back to why was I really saying I wanted to tighten up my stop loss? The answer being of locking in profits was correct. And the answer of minimizing the risk, thinking about risk to reward and risk management, the answer was correct, Joyce. All the answers you guys gave were correct. Actually, with our stop loss being at 286 and the market started trading up from where we got in, we were actually risking even more because now the market's trading higher from where we got in. And if our stop loss is still at 286, we got too much at risk on the table. So it's time to tighten the stop up for that reason. The other reason is when you look at this chart, you see that it kept trading in this trading range and got in a channel. But if you look to the left, you see that this area where we got this channel going on at actually is a area of support and resistance. If you look to the left of the chart, that the market has hit this price area quite a few times. If you are able to look over to the left of the chart, you see what I'm talking about. Does everybody see that?
Yes.
Look at what a channel is, and then look to the left of the chart. You'll see another channel over to your left. See that, Stephen?
Yeah, from September to October.
Yeah, you see what Barbara's cursor is?
Yep.
Yeah. So it was a trouble area on the chart, and the market kept trading to that area, and it was having trouble trading through. Now let's talk about some of the other reasons why I said it's time to tighten up the stop. You heard Paula mention that when you go to the contract specification, there's a couple of things on the contract specification that should stand out to us as to why we need to tighten our stop up. One thing we always talk about when we trading, we want what when we get in the market. It wouldn't matter if you had a $5,000 profit if you didn't have anybody to sell the contract to, right?
Right.
We always want to have something when we trade in the market. What do we bring to the market?
Liquidity. Is that what you have?
Liquidity. We want to have liquidity when we trade in the market. So one of the things you need to always remember when you're trading, this is a December contract, which expires in the middle of December. But always remember that liquidity is very important. If you're trading in a month where it's starting to get close to what's called first notice date, you're going to see liquidity start to go out of the market because everybody's getting out of that contract month. So can everybody see what's important about this week coming up on the contract specs?
Oh yeah. First notice. Oh.
Yeah. So when we coming up on first notice date, it's time to be thinking about our exit strategy, whether our target's been hit or not, right?
Yes.
So you always want to be thinking about this and paying attention, especially when you're trading in a month that's close to expiration. Also, too, you want to notice in this particular contract month, first notice date is Friday, Black Friday. Everybody see that?
Yep.
Okay. So it's really a possibility that the market could be closed Thursday and Friday.
Because of the holiday?
No.
Okay.
So here's another thing. I want you to think about it like this. When we getting close to expiration and we want to stay in a trade, we haven't talked about this, so that's why I didn't want to throw that in the quiz. If this was a trade you wanted to stay in and you wanted to, continue to trade oats, you can do what's called a rollover, meaning you can roll over to the next contract month and trade and continue to trade oats. But we haven't talked about that, so I didn't want to confuse you on it. But that's another option. But you will notice that all of the volume and open interest will start to go down as we get closer to first notice date, and it will start to go into the next contract month. And that's what you need to be paying attention to when you're trading in a month that's going to be close to expiration. Also, if you know anything about me when it comes to trading, you'll know I don't like to trade at certain points or certain periods of the year. Anybody know what that is?
Holidays.
I don't like to be in the market around the holidays. I've been burned too many times for it, and the volume drops off dramatically as you get close to the holidays because a lot of traders get out of the market and just wait on the side until the holidays pass. And you will notice during the week when the holidays is coming up, the bears are literally in control most of the time because there's so much selling going on. So all these are things that I'm thinking as I'm thinking about tightening up my stop. So that's why I said I would recommend tightening up your stop. There was multiple reasons involved. Um, and I did get stopped out at 309 and a half. So I tightened up my stop and I stopped out at 309 and a half. Does anybody know what my profit was on this paper trade? No one? Are we able to see the contract specification? Hello, anybody here?
Yes, I didn't participate in this one. I had missed
Yeah,
the class.
somebody know this answer.
I,
If
Come
they
on,
when you see the
when,
where did
contract,
he enter
hey,
it?
when you what number did you come out? 309 what?
and a half.
I
Where
would
You
did
say
guys
where did
told
300
he enter?
bucks. 300 even?
you
If you
guys
went in
told
it.
me that we got filled at 306 and a half, correct?
306 and a half, 309 and a half where he got out at and he entered 306 and a half. Somebody do the
So I
math.
would say each point is $50. So 50 times, am I saying? Oh, it's 3 points. So it'll be 150 bucks.
Very
Is that
There
good.
correct?
you go.
Very good. I don't know if everybody moved their stop and where you moved it to, but that's what my profit was, John. Correct. $150. Hope everybody got that. Hope everybody saw that. But that's what that's what's all the things going through my mind when I was talking about tightening up my stop. Anything you wanted to touch on, Johnny?
Hey, I wanted to ask you, but for you, was this a live trade?
This was our paper trade, but
Right.
going back to my live trade, I got in at 303 and I moved that stop loss up to 309, Johnny.
All right. So let's talk about what you really made on this.
Mm-hmm. On my live trade, I got filled at 303 even, and I had my stop loss at 309 even. Anybody know what the profit was on my live trade? It was 150 on the paper trade. How much was the
300.
live?
300.
$300.
Very good.
But now all
Also,
the information, I'm sorry, the information you shared is really good. That's a lot. That's some of the little things I forgot about. So it's good to be all the stuff that's running through your mind. That's extremely important with you. All that stuff you just mentioned. Yeah.
yeah, we have these things to think about along with we want to lock in our profit, but along with we want to keep the risk management the main thing, but we also want to be looking at the fact that when does this contract expire? And John, you've been around since the
In
beginning.
volume.
Yeah, the volume. You've been around since the beginning, John. You heard me talk about I don't like the holidays when I'm trading.
Yeah.
Oh, I know that. That's like going to Disney World, right?
All right.
The
I
sugar.
mean, when everybody goes home, then volatility it's going to go down a lot faster than it goes up.
Right. Yeah. So,
Especially when you've got first notice or, because people are coming out of the contracts.
mm-hmm. Big time.
Now, a lot of this, again, will depend on some other things. Can you scroll down just a little bit on this page? Okay. Look at the commercials, longs and the shorts. When people are coming out, they're coming out one way or the other. They're either buying or selling
Mm-hmm.
to get out of their contract. So we know doggone well that this is at the bottom, right? So odds are, well, you can see the number of commercials, so these are some of the things you look at. But
Mm-hmm. And I want to ask this while I was thinking about it. Is there anybody that's still in the paper trade? Anybody still in our December oat paper trade right now?
they shouldn't be. What was our stop that we started with? Somebody?
286, right?
Yep.
286.
Yep.
Mm-hmm. Jamal, yes, you still in, Jamal?
Yeah, tried many times to try to cancel it. The guy said I couldn't see it on my board with it canceling. I was able to see it the first time. Then I called in like twice. So I just said, man, I just left it in there because I couldn't see how to cancel it.
If
And it couldn't sell.
286, everybody that did not move their stop loss is still in it. Correct?
Correct. Yeah, they have not been stopped out yet. But they're losing at the moment, or are they winning at the
Oh,
market?
that's a good question. If it closed at 305, how much are we down?
Wait a minute. 75, I think. Let me make sure I'm telling you.
Hold on.
Oh.
We got in at where?
Got in at let me see, 306.4, and you saying it's at 305.4. Well, then I would say it's 1 point, which is $50.
Correct. So have we lost 10% of our net holdings?
Yeah.
And the answer should be no. Correct?
Correct. You've lost $50 at this point.
So the question would be if I'm still in the let's say I'm still in the trade. What are my thoughts based on what we talked about tonight?
I would get out, but that's just based on everything, like you say, the holidays and what's going on and the selling. It's going to
Yeah,
continue.
John, let me add a word.
Go ahead.
Looking for a place to get out. Okay.
Mm-hmm.
So you guys always told us that the trend is our friend. So if I'm still looking for a way to get out, I would follow it. And the first place I see I can sell it, I would do it expeditiously.
And if I still wanted to be in the trade, what would I do?
Bye.
Uh, I honestly can't remember what Delvin just said a minute ago.
Rollover?
Yes, rollover. I would go to the next month and
Oh,
buy a
okay.
contract.
Okay, I have a question. Can we go back to the specifications? Maybe I missed something. Uh,
Okay.
Further down. I think it was on the chart. Okay, that middle chart, what does that represent?
Would
Right
somebody
in
like
Commit.
to answer that?
where it says commitment of traders position,
Correct.
commercials, long, short. Then you have that first column, and then there's the second column. What is that? Maybe I've missed something.
The second column.
Yes.
Uh,
Says
okay,
yeah,
so do you see where it says commercials long dash short?
right.
Okay. Of the commercial buyers, you've got 17,000 or 1,732 contracts long and 2,933 short. And the difference is whether they were up or down. If they were
Okay.
down, it would be negative in red.
Okay. Okay, I see. The long and the short. Okay, I got you. All right.
Okay,
Thank you.
so then you have your producers, the money managers, okay, non-commercials, the swap dealers and other reportables. It
Thank
used to
you.
say not, instead of non-commercials, it used to be, speculators, right? Small speculators, which would be us, right?
You good
Notice,
now, Joe?
notice that the non-commercial long shorts are really pretty close to each other in numbers.
Right. Okay. Thank you. I got it.
Awesome. Good question, Joy. All right. So if you are still in this trade, we can't tell you, what to do. We just giving you our recommendation. If you stay in the trade, consider the fact that it's coming up on first notice date to get out of the trade. So if I was still in this trade, which I got stopped out of, but if I was still in this trade, my broker, or our broker, me and Johnny had the same broker, my broker will be calling me this week to make sure I'm paying attention to the fact that it's first notice date. Then what you gonna do about this trade, man? Are you paying? First notice date is Friday. That's the phone call I would get. In other words, he's telling me you need to be getting an extra strategy together. And that's what Johnny is telling you. Hope everybody understands that. So that's the things we look at when we in a trade, especially like the one that we got in. All right, Barbara, thank you for letting me break it down. Me and Johnny go over it a little bit because I think it was good to dissect this. And being that we did a paper trade in there, I wanted people to understand why stop loss needs to be tightened up. We want to be trying to get in position to keep profits and get out of this trade at the same time. All right.
All right.
So,
Do you want to go ahead and go over the homework assignment, that live cattle trade that we had?
okay, let's do it.
Homework. Okay.
I think this is the assignment Dr. Melville gave, right?
Yes.
Well,
What exactly was the assignment Dr. Melville gave us on this?
They had to work up this chart based off of this being the entry, stop loss, and target, and give us the risk management. What do they profit from it? What did they potentially stand to lose? What's the risk to reward ratio?
Mm-hmm.
Very
Nice.
good trade, by the way.
Very good trade.
Excellent trade.
Yeah, this is definitely some money in the bank on this trade right here. Boy.
Yeah.
Okay. So did we already do this? Did anybody already got this worked up? Um,
Yeah, we did have a few people that turned in their charts. Did a good job.
awesome. Would anybody like to, take over? Tell us what you got. Who who wants to be that big trader today?
Come on, somebody. Who turned in their homework assignment they want to tell us? Or somebody else that didn't turn it in but worked it up.
I I don't know. I worked it up. I think I've sent a picture. I don't know to Delvin or some. I'm not sure, but yeah, I worked this up when I think it was about a week or two ago. Um, how can I? Yeah, I have mine up because I logged in. All my information is still on the chart.
So
All the
what was
resistance.
so what was
Yeah.
your first activity, John? When you came to this cattle chart, what did you do first?
I did my 50% retracement.
Great. Okay. Once you establish that,
I can
what
tell
you
you
you you you
the
know what your
target.
50% retracement was? What was your 50% retracement?
Let's see. Well, I know my target. The 50% retracement target would be 225.324 was my target.
Right, close enough.
Uh,
And then did you see a formation on the chart after you
yeah.
worked up? What
Yep.
did you see?
Um.
Did you
Let
see
me
a
see.
counter or a top or a bottom? What formation did you see?
Let me see where I came in at. Okay, entry came in at 240.48.
What formation did you see first? Did you see a 1, 2, 3 top or
I
bottom?
saw a top. Yeah, top 1, 2, 3.
Okay.
Yeah. Set my stop loss at 245.384. Support was 240 at 486.
So let me ask you this: once you saw that 1, 2, 3 top, um, did it did the market confirm that it was indeed a 1, 2, 3 top?
Yep. Hmm.
Okay. So then you saw now it's an opportunity to start getting in position for a trade, right?
Correct.
Okay. So now you got to start determining where you want to place your order, right? So
Right.
what kind of order would you be placing? Would it be an order to go long or to go short?
It'll be the order to go long.
Hmm.
I think I'm
So
telling you right.
what formation did you see again?
Hold on. Top 1, 2, 3.
Okay. So when you see a 1, 2, 3 top formation, that means that the market was in what type of trend before it formed a 1, 2, 3 top? What trend was the market in?
That upward.
What's
Down.
what? it's coming down. It would be a
Yes, it's
down.
coming down.
It's coming down to get a confirmation. Yes.
Mhm.
Okay, so let me ask it again. When you saw this 1, 2, 3 top formation, what trend was the market in before the formation formed?
Before the formation form.
What trend was the market trading in before the 1, 2, 3 formed on the chart?
Upward, right?
Oh, it's going upward. It went at
Right,
3. It was going upward.
There you
right.
go. So the
Upwards.
market was so if the market was trading up, the 1, 2, 3 forming on the chart is indicating that the market is
It's about to
trying to
trade
change direction to
down.
go
That's
in what
right.
direction.
It would
Down.
be down.
Okay, so now if you see that the market is trying to start trading down,
Hmm.
you want to trade the market in what direction?
It would be a short then.
Right.
Correct.
Ah, that was my mistake. Okay.
That's okay. That's why we're going through this. All right. So
Okay.
now that you see that and you want to start getting in position so you can put your order in, what type of order are you going to place so that you can go short? Your limit
Sell.
order is going to be what type of limit order?
Sell.
There you go, Pam. Very good.
Hmm.
Okay.
Just sell order. If we want to go trade the market down, we sell first, correct?
Right.
Okay.
So our order would be a sell limit order. All right.
Okay.
And our stop loss would be where?
Stop loss. I got it at 245,
Where would it be
384.
based on the numbers, the 1, 2, and the 3? Where would it be?
Oh, it'd be at
Below the
number
3.
3, but right,
Number
but
three.
yeah. Yep.
Okay. Let's walk through this. If the 1 is resistance, you know, with me, that's the ceiling.
Mm-hmm.
And then the market trades down to number 2, which is support. With me. And then when the market trades back up to the number 3, which is another level of resistance, we want to be above the resistance. If the market trades to that resistance and trade through it, we want to get stopped out. We want our stop loss above the resistance, not below it. Does that make sense?
Right, I'm at the top of the 3. Yeah. So you're saying just a little bit above the 3. Is that
Above the
what you're?
3. Okay.
Yes,
Yeah.
not below it, above it.
Okay. Okay.
Yeah. I'm right
The,
on the
resi-
top of it.
the
Okay.
resistance could hold. The market can trade to the number 3
Right.
and then trade back down. So if we were to get filled at the number 2 and the market goes against us, it could trade to the 3, but not through it. Meaning that if our stop loss is above it, we would still be in the trade. We wouldn't have got stopped out. We want to
Oh
be
yeah, a
above.
little bit of cushion.
We
I
want to
see
be
what you're saying.
above the resistance, not below it. Does this make sense?
Yeah, I got you. Above. Yeah.
Right. So you said you got filled at what price, John?
I got filled that entry was 240, 485.
Okay. Let me ask you this: what is the point value for this market?
Let me see. That I need to pull up. Hold on. Specs.
Don't we need to know that so we can determine how much we're risking on it?
Yeah, I had the risk all in here, the 19. Yeah, I think I hand wrote a lot of this stuff. Let me pull the
Mhm.
specs. Yeah,
400.
contract specifications. Here we go.
I think that was Paula who just helped you out.
What? Let me see. I didn't. I didn't hear it. Hold on.
Okay, say it again,
Volume.
Paula.
400.
What is it?
$400.
Value of one option. Okay, yeah, I see 400. Yep. 25 cents per.
Now, here's what I want you to be thinking about, John. We we always want to make sure we get into a good trade before we get into our trade. You know, and when I say a good trade, that's going to be making sense when it comes to our risk to reward ratio. Um, did you take this into account?
Yes, I did. The risk to reward ratio, the risk was 1959 and 36 cents, and the reward ratio was 6,064 and 68 cents. A 3 to 1.
3 to 1. That's
Yep.
that's a number. That's numbers we like to hear, right?
Yep.
When it comes to our risk to reward ratio, we like for it to be at least 2 to 1. We love it when it's greater, but at least 2 to 1. All right. So we got good risk to reward ratio on this. Meaning, and your target is
Target is 225, 324.
okay. So you got filled at what price again, John?
240.485.
Okay. Now, and when the market, when you got filled at this price, did the market trade to your target?
Yes, the market actually let me make sure I'm telling you right. Support. Yeah, it
It went
actually went
through it.
past the target. It went through it. Yeah.
Yeah, man.
Continued
You
on. It would have been a lot of profit.
a whole lot of profit. Yeah, real good trade. So, Johnny, anything you want to touch on here? Just feel free. I'm just trying to walk through this with John.
I want to know where his stop loss is, or did he come out?
Yeah.
Oh yeah, my stop loss because I just did the 50% retracement. I came the 220 went to the my target was the 225.
Say that again, please.
The target was 225. Yeah, the way I just went based on the what is it? Um
Well, John, are you still in the trade, or did you come out?
no, I came out. This was an assignment. I came out right.
Okay.
At the target, right?
Yeah, at the target.
So, can anybody tell me what would John order to get out of this trade be? What would his limit order be to get out of the trade?
Goodbye.
Would
Very
that be a
good.
buy order to get out?
Very good. That's right. What do? We sold first, right?
Yeah.
In order to go short, he sold a contract. Remember, so in order to get out, he had to buy a contract to liquidate it. So very good.
Yeah.
Now, in this case, John decided to take himself out at the target. Nothing wrong with that. His target was reached. He was fine with his profits. He exited the market. Now, just to give you another scenario, the target is reached, and the market counts down to your target, and then it trades back up. I don't know how John was moving his stop, but if John didn't get stopped out yet, the market traded sideways and then continued down lower, trading through his target, which meant that he could, if he was still in it, he would have still continued to earn profit, depending on where his stop loss would have been. He may have gotten stopped out when it traded back up to that second number 3. Just depends on how close he was trailing the market. But if he was trailing with a decent size stop loss, he may have still been in the market and then continued lower, which would have been substantially more profit. So good job on the homework, John.
Question.
Yes, Joyce.
So if he had gotten out, which I think if I understood him correctly, he did, this would
Mhm.
be a good time for him to start to look for a rollover, right? To sell. I mean, to buy. I'm sorry. No, no. Wait, whoa, 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 whoa. To sell.
No,
If
if he
he's
wanted to
going to
get
go
back,
rollover.
you saying if he wanted to get back into cattle?
Right.
Well, since he's already out of the market, he don't have to do a rollover. He just go to the next contract month and place the order to enter that market. If he
Oh,
had,
okay.
if he was still in the trade and hadn't been stopped out, he could roll over.
Okay.
So,
All right.
does that make sense?
Yeah.
Yeah, we do the
Okay.
rollover. We do the
I think I
rollover when
see
we
what you were talking about. The rollover when you very close to expiration. Okay.
and you're still in the trade.
Okay.
All right, there you go. But good question. So in this particular case, John, the market paid trade to your target, and this was a very profitable trade for you. Um, and the fact that it kept going through your target, that's great. But we don't dwell on it. Does that make sense?
Right.
It's another opportunity to get back in it using the 2 and 3 if you wanted to. But in this case, you would move over to the next contract month to do it because you have a December contract in the live cattle.
All right.
You see that? Yeah. So it would be another situation where we want to watch the expiration and the first notice. That's what Joyce was pretty much um, thinking about. But this was an awesome trade, Bob. I'm talking about this.
I have a question.
Yeah. Come on, Paula.
In the situation where you do a rollover, is
Hmm.
there a cost for that? Any kind of financial hit?
Yes. Yes, it is because you're going to move over to the March or the next trading contract month, and that's going to be a new position. And this contract over here, the trade you have in this contract is going to get liquidated. So whenever we go in, there's a cost, and whenever we go out the market, there's a cost. So you will be rolling over to the next contract month, and then there will be a new position because you won't get filled. 99.9% of the time, the other contract month is not trading at the same price. So you're gonna get in at a whole nother price. Does that make sense?
Okay.
Yeah, it won't be at the same price. So you're gonna get into it's gonna be a whole new trade, but because it's a rollover, you can trade. You can you will only be charged the fact that you are exiting this contract month and entering the other one.
Okay. Thank you.
Yeah, and then look, keep this in mind too. Um, in this case, we have a trend that's really been established, and the market's trading down. We see multiple twos and multiple threes. If John got stopped out at his target and he exited at his target, could he get back into this trade just based on the fact that he has these other 2 and 3s on the chart?
You would have to do a new trade, submit a new order. Is that what you're asking?
Yeah, but the trend is still intact, and he can still continue to trade it. He can
Yes,
get back in. He can get back in it. And if
yes.
you just came along, you didn't get in when John got in. You just happened to see this chart
Yeah. Yeah.
later on. Could you get into it?
Mm-hmm.
Yeah, correct. Awesome. You got anything, John? You clear?
No, and I'm good. Yep, thank you. Yeah.
Yeah, thank you for stepping up and doing that for me. Um, let me pick on you for a minute. I appreciate it.
Sure.
Anything you got, Johnny, before we move on?
I just got one question. What color do you think that last line is?
Hmm.
Well, you asking me? I would say it's a green
Good answer.
because if it's going back up, yeah, it's going towards you. It's following you. How can I say? It's taking the downtrend, but it's going
And
where you
this is
want it to
still a
go.
6-month chart, right?
Um,
Yes.
July, I would say, yep, 6 months.
Yes, it's 6 months.
Awesome. Any questions on this before we move on? That's a crazy trade right there, Barbara.
Boy, I
Hey,
wish I was in it for real.
Every trader's dream. This is what you want to do. This is kind of trading you want to do.
Correct.
It's a classic profitable trade going your way. This is what this
Yep.
is.
uh, let me ask Delvin a question.
Mm-hmm.
For everybody. So if you were still in this trade, Delvin,
I think I know the question. Uh-huh.
where's your stop loss going to be now? And would you have been stopped out?
No, I wouldn't. Um, one thing about how I trade versus how I used to when I first got started. Um, I love when it hits my target, but until the market stops me out, Johnny, I'm still in the trade. If it hasn't hit my stop loss, I'm still riding it until I
Where
get
would your
stopped out
stop loss be right now?
above the 3. You see that in this particular case, you see where they one
Yeah,
the third.
Barbara, can you put another 3
Yeah,
in?
Can I ask a question, please?
come down. You see what it took. There you go, Barbara. Yes. Who had a question?
V.
Hey,
So
V,
just
come on.
imagine you were watching this trade and it's hit your, well, it keeps going, it keeps going, it keeps going, and you're watching this. Would
Mm-hmm.
you just keep moving your stop loss and keep securing more and more profit?
That's exactly what I would do. That's what Johnny was alluding to. That's exactly what I would be doing.
You wouldn't just get stopped out. You just keep going and going and going day by day, basically.
Yeah, the market's gonna have to stop me out to get me out. That's how I trade.
Yeah. Barbara, I think
Right.
you could put a 2 at that last bottom line too.
Nothing wrong with coming out at the target, but I keep trading until I'm stopped out, and that's something that comes with time. You'll get comfortable doing that over time.
So then your risk to reward ratio just keeps going up, basically.
Well, yes and no, because I'm moving my stop down, trailing the market, so it's not like my stop is still all the way up at the first number 3. You see what I'm saying?
Right.
So I'm bringing the stop down, trailing the market, but I'm giving it room in case it wants to, pull back a little bit.
That's how you
So
secure your profits. That's in the manual too, guys. If you read the manual, you know that's in there.
yeah, It doesn't always get this sweet right here, but this is a sweet one. If you was in this trade right now, you'd probably be feeling real good right now.
Yep.
And that's a big move for live cattle.
I heard $6,000.
That's just at the target price, John. I mean, Stephen. It's a lot more than that.
Yeah, it'd be like over 10,000. It'd be a lot of money.
You follow what I'm saying, Stephen?
Was anybody in this
Yeah,
trade?
yeah, I see it. I understand it. Mm.
No, I
Not
wasn't.
really.
This is just when I was just coming on in one of my homework assignments. So
Yeah. Awesome. Well, if we don't have any more questions on this, we'll move on to whatever slide Barbara want to show us. Oh, what you had, Barbara? Did you want?
That was it.
Okay. Um, do we did we have a video we wanted to
Yes.
Also, just to make sure I mention this, guy, we have had 22 or 23 trainings this go around, and we have a holiday coming up next weekend, which means that we will respect the holiday and honor the holiday for all those who may be still traveling um, next weekend. So that means we will skip next weekend's call, and then the following weekend we will be starting from lesson one, training on lesson one. Am I right, Barbara?
That's correct.
All right. So just to make you guys aware that we won't be ending this series. But man, I think it's been a great one, Barbara. Johnny,
Yes,
the
sir.
the way that we have went about the trainings this time, man, I tell you, I've seen so much growth in the group, and I think this was a great idea to teach and train this way because it gave us the opportunity to teach and train on some stuff that we normally hadn't been touching on. And yeah, it was really nice to move at a pace where we wasn't rushing and trying to hurry up and get to the next lesson. And I think that also helped with the growth of the people. So y'all hear me saying all the time that you know more than you think you do. You know, I don't even know if John thought or believed that he could work up that homework chart the way he did. That was a really good job, man. What it does, it shows you know exactly what to do. It's just that we have to get going and start doing it. That's why paper trading helps us so much. That's why all our learning's gonna kick in when we get into a trade. So whenever we do a paper trade, and you don't have to wait for us to do a group paper trade. You can do some paper trading on your own. It's only gonna help. And you guys, like I said, y'all know more than y'all think you do. Y'all come a long way. So congratulations to y'all on that. Now, this is the last training for this series, but go back and watch those videos and do some more paper trades. I can't stress that enough. Don't let that paper trade be your only paper trade.
is it okay if we share, Delvin, like paper trays, share it in the group?
Absolutely. Man, we love to see that.
Okay.
Yeah.
Yeah, I'm gonna start doing some heavy research in the morning. Start do some paper trading.
Yeah,
More paper
that'd be
trading.
great.
We'll see you
Yeah,
guys in 2 weeks.
please share it.
All right. Well, thank you, everybody. I would say, hey, enjoy the turkey. Have a good Thanksgiving, everybody.
Same here. Be safe. Looking forward to seeing y'all in 2 weeks. Be blessed.
All right.
Have a happy and safe holiday season. God bless everybody. Good night.